Hello, everybody, and welcome to lesson 4A for contemporary math, taking control of your finances. In this lesson, I will talk about the true cost of many things, a little bit of credit card uh, talk just so you can have some more familiarity with that, and budgeting. So, the first thing here, just reading a few sentences, people who take control of their finances tend to be happier. People who usually do that tend to be more organized and in control of most of what they do in their life anyway. So, if you can be in control of your finances, that will definitely make you a happier person. People who lose control of their finances tend to stress financially, which in turn leads to higher rates of divorce and depression. Um, a lot of the times, maybe you've heard people get divorced because so and so was doing this with their money and the other person didn't know, whatever. So, being able to communicate about money, being open with money and what's going on with it, also can help out very, very well. And the most important principle that you can follow with money is spend less than you make. If you can follow this one rule outside of a house, outside of a car, you will almost always have to have a loan for that. Spend less than you make. You will tend to be happier. All right, first example here, let's just take a look at it. Stephanie is your average student financially. Her one little indulgence is that she loves coffee and regularly stops at the local coffee shop for a gourmet coffee about 10 times a week. She deserves this, of course, for all her hard work at school. If she spends $5, and that includes tax, each visit, what is she spending on this small indulgence each year? Well, we can say that she gets 10 coffees per week, and there are 52 weeks in a year, roughly 52 weeks in a year. So that's 520 coffees total. And we know each coffee costs $5, so if we multiply this by $5, that's $2,600 worth of coffees for an entire year. And so, just to break that down a little bit differently, this is $2,600 per year on coffee. Now, most of us don't normally think in terms of years, we go month to month. So if you divide this number, 2,600, by 12, you get $216, roughly $216 per month on coffee. And this amount right here is low enough, could be low enough to be a car payment. So that's a lot of money going toward coffee. All right, problem 2. Let's take a look at this. Credit card expenses. Looks like we have our Stephanie back here. Stephanie loves college. The people are so nice. While on the way to sign up for her first semester of classes, she met a cute guy at a table who was able to get her signed up for her first credit card. And the interest rate was only 21.4%. Again, the interest rates can be that high. She figured it'd be a great way to establish some credit, and she was kind of short on funds anyway. She put $1,000 on her new credit card to pay for tuition and books. If she maintains a monthly balance of $1,000 on her new credit card for the year, what will she pay in interest? Well, to figure that out, we're always going to take the interest rate that's given and turn it into a decimal. And since there are monthly billing statements, we will divide that interest rate by 12 so we can figure out the monthly interest rate, which would be 0.01783. Now, if we take this monthly interest rate and we multiply it to her balance, right? $1,000. So if we do that, 0.01783 times her balance, we end up with $17.83. And that's interest for 1 month. But for the entire year, you'd have to multiply this by 12 and get $214, again, roughly $214 of interest for the entire year. The last thing here, we're going to talk about basic budget ideas. So, one, you want to start by listing your monthly income. Use a monthly average for any income that is not received monthly. Two, list your expenses, including a monthly average for sporadic expenses such as books, tuition, birthdays, payments, car repairs. Anything that might only happen a couple times per year, you want to take an average for monthly. Three, your net cash flow is found by subtracting your total expenses from your total income. And four, this is an ongoing process. As you track your expenses and see where your money is going, you will need to make adjustments. And I can speak from experience making a budget. It is always changing. So make sure you are making adjustments when you are having a budget. And just a few tips here to end with for budgeting. You can find a ton of free apps. I think one of the biggest name apps out there for budgeting is Mint. And that is a Quicken app from the people who do Quicken loans. So their technology, their software is pretty good. I personally do not use Mint, but I know it is available out there. I have these. I have envelopes for savings goals that I have. I save. I have an envelope for my kiddo. I have an envelope, I call it Ventures, when I want to go do something for myself or with the fiance. I also use a spreadsheet for my monthly expenses for my actual budget. So these are free. You can use Google Docs, or if you have Microsoft Excel, you can just use a spreadsheet pretty easily. Problem number 3. We are going to take a look here at gifts and holiday expenses. So last year, Steffi spent $325 on gifts for family and friends and a total of $300 for holiday expenses. If she creates a gifts or holidays category, how much should she budget each month for these expenses? Now, this is what I was talking about in the last slide. When you have the sporadic expenses, you are not going to spend $325 on gifts for family and friends and $300 for holiday expenses every single month. You're going to do that at Christmas time, one time per year. So how would you figure out what you should be saving for this in your monthly budget? Well, you just have to add the two together. So I've got $325 on gifts for family and friends, $300 for other expenses, and you can add that up to $625. So last Christmas, Steffi spent $325 or $625. If she wanted to plan for the next Christmas, she could then take the $625 and divide it by 12, as that's how many months there are in a year. And it would be about $52 per month she would want to save for her holiday expenses. And we get more into that right here with example 4. We want to create a budget. Now it says college student budget, but this can be for anything. So how you want to do this is you want to set up a little T-chart. The left half will be income, and the right half will be expenses. And please do not let this discourage you. The left half, the income side here, will almost always be a shorter list of things than your expenses. And in fact, I want to take care of the income first. So let's see how much Steffi is making. She has monthly expenses: $300 for rent, $35 for utility, $250 for groceries, $150 for gas, blah, 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 blah. She spends that much for tuition, books, lab fees, da da da. And okay, her take home pay from her job, here we go, income. Her take home pay from her job is $1,075 per month, and she receives scholarships for $750 per semester. All right, let's see. Her mom and dad give her $900 each semester. Wow. $900 per semester. All right. So, the point with having this spreadsheet that you're creating, this budget, is to figure out how much you are getting each month. So, with the job, we know each month, check. But each semester doesn't help. So what we have to do, and we assume that there are 2 semesters in a calendar year. So to figure out the rest of this income, I have to take over here $750 times 2 semesters, and we have to divide that, let's see, that's $1,500. And then we have to divide that by 12 to figure out the monthly income of $125. So scholarship is $750 per semester, right? But we want monthly. So the scholarship now becomes $125 per month. And we have to do the same thing with the parent money. So when we do that with the parents, it'll be $150 per month. So we have all of this income. How much total income will she be making a month? Well, 1,075 plus 125 plus 150 will total to $1,350 per month, which is pretty stinking good for a college kid. All right. Let's do this again for all of her expenses. So we can see here monthly expenses. So I'm just going to start listing them down here. So here are all of the monthly expenses that are listed up here in this very second sentence. So each semester she spends $750 for tuition, $600 for books, and $30 for lab fees. Now, since we're doing this with semester, all 3 of these, tuition, books, and lab fees, we could have done it here, and I'm going to do it here just to save a little bit of time. Since they all happen at the same time, in the same number of times, twice a year, we can just add the $750 for the tuition, the $600 for the books, and the $30 for the lab fees, and multiply it by 2, because she's going to pay twice a year all 3 of these. So when you do that, you will calculate that to be $2,760 for the entire year. Then we can divide it by 12, and we can say it will be $230 per month. So I'm just going to say school, $230 per month. In addition to that, some other expenses include the holiday expenses that we just figured out up there, which again was $52 per month, and $600 for clothing. All right, so that's per year. Each year she spends about $600 on clothing. So for the clothes, let's say $600 for the entire year. If she wanted to budget monthly, that would be $50 per month. So we've got gifts and clothes. So let's see. This is again from number 3 above. And then we have clothes for $50 a month. Now, if we add up all of this, there will be a total expense of $1,410. And this is bad. Remember, the best principle, the main principle for this is you have to spend less than you make. And that is clearly not happening. Right now, the cash flow is your income minus your expenses. This means Steffi is spending $60 more per month than she has. And that's bad. That's really bad news. So maybe she should stop eating out so much with the fun, I call it, the eating out and entertainment. Maybe she should focus on paying her credit card off first with all this money instead. Who knows? Maybe she should drive less or figure out how to eat cheaper. Steffi has to save $60 per month because right now she's going the wrong direction. All right, the value of education. So the median annual earnings for a woman having a high school diploma is only $21,113. The median annual earnings for a woman having an associate's degree is a lot more. If Steffi is a high school graduate, earns an associate's degree, how much more can she expect to earn over a 40-year career? Well, I think the easiest thing we can do here is figure out how much more would Steffi be earning if she had a degree instead of a diploma. And it turns out she would be making $18,000 more per year. And that's a lot. That's almost double. And if you multiply that by a 40-year career, that amounts to $726,920. I mean, that is an extraordinary amount of money. It's not all the time that the more education you have, the more money you make, but it does happen frequently enough for people to say, hey, it's probably a good idea for you to be getting a degree. And it can also help you out. And if you can figure out how to make this money work for you and be in control of it, you will be a happy, happy person. The last couple examples here, or I guess this is the last example, helps figure out the true cost of having a car. So currently you drive 300 miles per week in a car that gets 15 miles per gallon. You're considering buying a new fuel-efficient car for $12,000, and that value would be after the trade-in on your current car. That gets 50 miles per gallon. Other things you have to account for when you're buying a car: insurance premiums. Insurance premiums for the new and old car are $800 and $600 per year, respectively. So respectively just means the new car insurance premiums match up with the first number, and the old car insurance premiums match up with the second number. You anticipate spending $1,200 per year on repairs for the old car and no repairs for the new car. And you assume gas costs $3.50 per gallon. Over a 5-year period, is it less expensive to keep your old car or to buy the new car? Well, the first thing we should probably do is figure out how much does it cost to have the old car. One of the easiest calculations we can make is figure out how many gallons per week you're using with your old car. Your old car gets 15 miles per gallon and you're driving 300 miles per week. That's 20 gallons per week. With this knowledge, now we can calculate how much you're spending in gas. Gas costs $3.50 per gallon. So if we multiply this by $3.50 per gallon, then we can calculate that you'd be spending $70 per week on this car for gas. Now, we're trying to find out a 5-year period worth of cost. So this is per week. So we would then have to multiply this by 52 weeks per year. And then we would also have to multiply this by 5 years. And so when you multiply all this out, the gas cost gets really crazy. It's $18,200 for 5 years worth of gas. I bet you don't think about that. That's the price of a new car. Okay, so what else do we have to take into account for here? We have to take into account, we have gas. What else? Insurance premiums and repairs. All right. So insurance premiums would be $600 per year times 5 years. So $3,000 total. And repairs. That would be $1,200 times 5 years, which would end up being $6,000. So to own this car, we have this much in gas, this much in insurance, and this much in repairs, which is total $27,200 for 5 years. Now with the new fuel-efficient car, you have gas and insurance premiums to worry about. And those calculations are the same as the gas and the insurance calculations up here. But now you have to pay for the car itself, a $12,000 car. So we don't have repairs on the new car, but there's a, we'll say purchase, $12,000. So when you add up these three here, you'll end up paying $21,460. Now, this would be a much better deal if you had $12,000 in your pocket to just pay for the car. But you would probably have to get a loan, and then you'd have to figure out how much interest you'd pay and see if that interest added to this total would still be less than this. And I think this is a really big deal trying to figure this out, because especially down here in Texas, people like their trucks. Trucks get 15 miles to the gallon. Maybe it's gotten a little better since this problem was created. But fuel efficient cars are also getting more than 50 miles per gallon now as well. So there's a lot that goes into finding the true price of a vehicle. And there are websites out there that do it, and you can find them, and it's makes it real easy to understand the true cost for owning a car. And that concludes the lesson for 4A for contemporary math. Good luck.